So this is another stock which I have rejected today. I am not putting this on my watch list for tomorrow. And I want to discuss the reason with you why I don't want to get involved with this stock. So this is Samvardhana Motherson International Limited. This stock came in my filtered list. And I looked at the stock, I looked at various factors, and I decided that I'm not going to buy this stock tomorrow. Okay, let us discuss. First, the moving averages. The blue line is above the green line, which is above the red line. So the 50-day moving average is above the 150-day moving average, which is above the 200-day moving average. Fantastic. It's a stage two uptrending stock. And the price is above the 50-day moving average, which is even better. It's not mandatory, but it's better that the price remains above the blue line. Next, I have drawn the base from here, as you can see. So this is 0.1, that's 0.2, and that's 0.3. So this is a fundamental reason why I have rejected the stock. I need minimum 4 points in the base. Here you have only 3 points in the base, okay? But this is not the only reason why I have rejected the stock. There are multiple other factors because of which I might not get involved in the stock, even if it forms the 4th point or the 6th point or whatever. And I want to discuss those factors with you today. Let's look at them. So that's 3 points. So basically, point 1 is the highest point in the base. Point 2 is the lowest point in the base after point 1. So I am joining the two extremes. Point 3 is the highest point in the base after point 2. Okay. So these two candles have the same high, basically 194.90 and 194.90. So I take the latest candle high as my point number 3. Okay. So there are no 4 points in the base. That is the reason I have rejected the stock. I want minimum 10 candles in the base. Here you can see comfortably I have more than 10 candles in the base. Now, inside the base, this is supposed to be a low volume consolidation period. Okay. After a high volume rally, I want a low volume consolidation. However, you look at 5th of August, the stock crashed 9.18% in a single day on very high volume, almost 3 times average volume. Now, that is not something that I want to see inside a base. I want to see low volume drop in prices. Okay. And this has created a shakeout here. After this candle, the price started to go up. There was a falling window here. So if I draw a line at the falling window, so the low of this candle is 192.59. Let's draw that. Let me give it blue color. Yes. So there is a falling window here. The high of this is 188. So let's draw that line as well. So the low of this candle and the high of this candle, there is a gap between these two prices. So between 192.59, the stock dropped to 188. That's a falling window. And as you can see on 21st of August, on low volume, the window was broken. That's a negative sign. You need, if a candle is breaking a falling window, you need a very high volume candle. Okay. Low volume means it's not showing enough conviction. Now, the fact that the candle has closed above the falling window means that now the window becomes invalid. Technically, the window has become invalid. Okay. So that's a good sign in the stock. Now, the price is still in the blue zone. If you notice, after point 2, I want the price to remain or trade majorly in the blue zone or the green zone, which is not happening here. See, the price goes up, touches the top of the red zone, and then falls back, and now it is climbing up again. Okay. So I want after point two for the price to quickly go up in the green zone or the red zone, sorry, green zone or the blue zone, stay there, consolidate for a while, and then produce a proper buy point. So if I have to draw what I'm visualizing here, see, I want point one, point two, point three, point four, point five, point six, point seven, point eight. This is the kind of price action that I want to see so that I can take my position at point number 7. Okay. If this kind of price pattern I get in the stock, there is a very high probability that once the stock breaks out from that point number 7, it will continue to go up. And most importantly, it will sustain in that rally. It will not drop back after, say, jumping 20%. There are a lot of stocks that jump 20% and then fall back into the base. It's because the base itself was faulty. The price up move after point number 2 was so steep that the stock never got the time to rest. Here, this is called as the resting period. Each of these points is higher than the previous point. This point is higher than this point is higher than this, and this point is higher than this. Same here, each of these points is lower than the previous points. That is called as price contraction or price compression. Apart from price contraction or price compression, we need volume contraction or volume compression. In this case, I don't see that happening. Okay. That is the reason why I just reject the base, even in spite of the fact that it has closed the falling window. Okay. This is one reason. Second reason, let's go to Market Smith. So this is Samvardhana Motherson International. Have a look at this basic data. EPS rating is 86%. What does this mean? This means that of all the stocks in the Indian stock market, 14% of stocks are doing better than Samvardhana Motherson International based on their earnings stability and earnings growth. The total number of stocks in the Indian stock market is roughly 5,000. 14% of 5,000 is roughly how much? It's at least more than, it's like between 500 and 1,000. Okay, that's the number. So comfortably, there are at least 500 stocks that are doing better than this company in terms of earnings stability and earnings growth and earnings consistency. If there are that many stocks which are doing better than this stock, then why should I commit my money to this stock? Okay, that is one reason. That's a negative factor. See, that's not the reason to reject the stock. That's one negative factor. Okay, I have bought stocks where the earnings rating was 70, 72 or 71. That's not a problem. I am just saying that this is one way to look at it. Number two, price strength 87. What does this mean? This means that there are, out of all the stocks in the Indian stock market, there are 13% of stocks, which means more than 500 stocks, which have done better than this company when it comes to 52-week performance. So if there are more than 500 stocks that have done better than this company, okay, why should I commit my money to this stock? Why not look at one or two stocks out of those 500? Is it that difficult to do? So now you have two negative factors. Okay. If this number was 95, then probably I would have ignored this number. You understand what I'm saying? So what I am doing here is I'm trying to weigh how many positive factors do I have in this stock and how many negative factors do I have. If the negative factors start piling up, then it reduces my confidence in the stock. And as you can see here, if I click on consolidated, quarterly earnings growth is 65%, which is fantastic. We need more than 45%. Fantastic. You look at standalone, you see there is a problem here, minus 4%. And consolidated, it is 65%. So there is a bit of inconsistency here. Maybe it has got subsidiaries which are doing well, but the standalone, the core business is not doing well. Probably that is the reason why the rating might have come down. I don't know. The accumulation distribution rating is A, which is fantastic. Group rank is 38. I would prefer the group rank to be in below 20. Okay, that is a good sign. But here you have 38, not encouraging. Number of funds that are holding the stock has gone from 600 to 700, positive. The management ownership is more than 60%, another positive. The P range is from 26 to 1000, but it is now currently it is 42. That is another positive. Okay, so there are a lot of positives here. But looking at the chart, looking at the base, the quality of the base, looking at these ratings, overall, I feel there are more negatives than positives for this particular stock at this particular time. I might want to wait another quarter or 2 quarters to see whether these ratings are improving, whether these earnings are improving, both on a standalone and a consolidated basis. And I want to see whether the base is getting tighter and tighter as the price continues to go forward. Plus, if the group rank improves, it goes from 38 to maybe like 19 or 17. That would be wonderful to see happen in this kind of a stock. That would give me a lot of conviction to commit money to this stock. So I have looked at multiple factors. This is a combination of technical and fundamental. Now, this is recommended only if we want to take a position in the stock. Positional trading is different from swing trading. In positional trading, I am looking at fundamental and technical factors. Then I would commit, say, 5-10%, which is a sizable amount of my portfolio. And then I might want to stay in the stock for good 6 months, 1 year, which is what I'm planning to do these days, which is why I'm very strict with my criteria. However, if you are a swing trader, if you want to capture that quick 10-20% move and then you want to compound those returns, then you will have to relax some of your criteria, capture the gain, buy the stock as it breaks out of the breakout point on high volume, buy the stock, capture that 10-20% or double digit gain that you get in 1 week or 2 weeks, come out of the stock, and then revisit the stock again as it forms the another base. That is the style of swing trading. I have observed that there are a lot of stocks that I have bought recently which I ended up selling early. For example, Indus Towers, which we discussed earlier, or Zomato, which we discussed earlier in my previous videos. If I had just held on to those stocks, I am making good money right now, but I ended up selling them to capture those early gains. Okay, but when I look back, I realized that I could have captured more profit technically, because technically these stocks were giving me levels where I could move my stop loss. I could backstop these stocks to capture more gain, but I did not do that. I ended up selling the stock early, where the market never gave me a clue to sell. And I have discussed why I sold those stocks early. So, considering all this discussion that I have done on this stock, you don't find conviction when I speak about this stock. Okay. And that is something, the intuition, the feel that I get by looking at all of these factors. I don't get the feel, I might miss out on this opportunity. Another thing you notice here is the relative strength is falling. Now, this is a big negative, by the way. I want the blue dot inside the base. The blue dot is basically the 52-week. Whenever this line touches the 52-week high, creates a 52-week high, that is when you get a blue dot. Now, blue dot you don't see here. See, here you see blue dot, the price goes up. Here you don't see blue dot. Forget about blue dot. The relative strength line is falling as the base is forming. What is this relative strength line? The relative strength line, basically, it uses the stock price, divides the stock price with the Nifty, okay, and then plots that, the slope of the line, okay, then plots the line basically. So if the stock is doing well relative to Nifty 50, the line will slope up. If the Nifty 50 is doing well compared to the stock, the line will slope down. So here you can clearly see that the general market is doing better than this stock. Okay, that's one negative. What is the RS rating? This rating is something which I have already discussed with you. This stock has done better than 87% of all the stocks in the Indian stock market when it comes to 52-week performance. Okay, that's what this relative strength means, which means Out of all the stocks in the stock market, there are 13% of stocks, which is roughly 500 to 700 stocks, which are doing better than this company in terms of price performance. So I should put my focus there if I really want to take a large, sizable position in a stock. So if my goal is to take a large position in a stock, but I want to own a few stocks, if that's my goal, then I have to look at the overall picture. How does the daily chart look like? How does the base look like? How do the earnings look like? How do the sales look like? What is the management ownership? Are institutions really holding on to the stock? Is institutional demand going up? These are the factors that I look for. If you look at the weekly, let's look at how the weekly chart looks in this stock. The software is low, software is slow. Anyways, let's come back to the daily. If the daily itself is not convincing, what's the point in looking at the weekly? So daily, the chart loads very faster. Weekly, it might take some time, probably because I am on the Zoom call. But you get the point, right? What I am trying to discuss here. When I look at everything in totality, I don't get a feel of buying the stock. I don't get that conviction, which is why I have decided to skip this stock. Some other day, I will discuss weekly charts as well so that you get a better understanding of what I am looking for in the chart. Thank you so much.